Hello and welcome back to my favorite people. Hope you're doing well. I'm incredibly excited for today's video because today we're going to answer the question on everybody's mind: how low will Bitcoin go? After weeks of saying Bitcoin was likely going to revisit this 57 to 59K region, as of yesterday, Bitcoin finally did. And of course, we thought this was likely because it aligned with the normal cycle scenario. We had an incredible rally from October of last year to March of this year. So it made sense that after that occurred, Bitcoin would enter a prolonged reaccumulation and consolidation phase. And of course, that thesis was further solidified by what we've seen from Bitcoin in summers historically, where we see very choppy periods outside of mania years like 2021 and 2017. These phases don't look that painful in retrospect, but in the moment, everybody was flipping back and forth between bullish and bearish after every single rally and retrace. I mean, even as recently as 2022 and 2023, leverage traders and short-term oriented investors kept losing money in both directions. And nobody wants to believe these lower prices are possible until the narratives start showing up out of nowhere. Like, for example, we've seen 7 straight days of ETF outflows after everybody told me that we were going to get 1 billion of inflows every week for the next 10 years. We've also seen the German government start to offload Bitcoin seemingly out of nowhere now that Bitcoin is at higher prices. And then, of course, the icing on the cake, Mt. Gox shows up and says they're going to begin repayments next month. And Mt. Gox has done this many times over the years. This one seems the most legit to date, but it's still not guaranteed, and we have no idea what rate they're going to be returning this Bitcoin. But again, all of these narratives conveniently show up when the market is most fearful and when we're in a correction during a very low liquidity, very choppy phase of the cycle. And I get a lot of pushback on this channel for being too conservative with my portfolio. I mean, where are the altcoins? Where are the meme coins? I'm missing out on the party. But this is kind of a strategy I built up from my experiences in 2023, 2022, 2020, 2019, 2018. And I noticed that for me, the easiest way to remain calm and not make mistakes in these corrections and in these prolonged choppy reaccumulation phases was to have a strategy that was very simple and wasn't too far out on the risk curve, so I could survive the volatility and didn't get liquidated like somebody who's trading aggressively in both directions on leverage, or having a portfolio that's really heavy on altcoins and meme coins and being forced to panic sell on a 20% or 30% Bitcoin correction. And that's why my strategy is way more based on probabilities and not certainties. I know everybody would love it if I said we had to go to the low 50,000s or we had to go back to the low 40,000s, but nobody knows that for sure. So what I think is a better approach is having a portfolio that can survive those scenarios. And I would love to add some exposure to this market if those prices get revisited, especially after so much chop and consolidation. But if we end up not revisiting those levels and this ends up being the bottom and we just take off from here, then I'll be happy I kept my 80% spot exposure for that upside. And then maybe I can rotate further out on the risk curve once we really enter Bitcoin price discovery, because I don't want to be the hero trying to catch falling knives along the way by trying to buy these riskier positions on pullbacks. I would much rather make sure that I survive this normal cycle scenario and avoid losing money in this choppy period. So for now, I still think these probabilities are very spot on. We achieved target number 1. I still think the low 50s is very possible, and I will add a little bit of exposure using some of the cash on the sidelines if we go there. And if we do go to where I think is quite an unlikely level, the mid-level of this entire rally, if Bitcoin were to come down and retest there, I would be very happy deploying cash at those prices, because at that point, I think it's a 40+% correction on Bitcoin. And historically, those aren't that common outside of bear market years. But again, hard to predict these things very accurately. We're going to document it along the way and try to keep up with what's happening. and adjust the strategy as needed. But for now, I'm very comfortable with my current portfolio, and I'm not really spooked by these narratives that are impacting price in the short term. I don't think Mt. Gox is going to return everybody's Bitcoin at once. It's probably going to be a slow repayment schedule. Same thing for the German government. They have no reason to offload 3 billion worth of Bitcoin in one weekly candle. They're likely slowly going to do it over time. And as for the ETFs, I think we've seen $14 billion worth of inflows since these ETFs launched in January. So if we see $1 billion of outflows while prices are going down, I think that's completely fine and just part of the chop and consolidation phase that we're in. So for now, we're just going to have to wait and see, monitor these things as they occur. But for now, still very comfortable in my conservative, quote unquote conservative, because to some people, this portfolio might seem too risky holding things like Solana and Ethereum and not being fully in Bitcoin. But for me, this is where I find myself comfortably on the risk curve. So for now, we're going to wait and see what kind of bounce we end up getting from Bitcoin here. Of course, that 20-week moving average is going to be the very interesting level to retest. Is it going to reject us and send us lower, or can Bitcoin reclaim it and retest that 69K region? I do think we would break above if we got back up to 69K here. But of course, the first test is going to be if we can reclaim that 65K region for now. And of course, a lot of what Bitcoin does over the next few weeks to months is going to rely very heavily on what we see from our friend, the dollar index. Still looks incredibly bullish, still looks like it's grinding higher, which of course, with its inverse correlation with Bitcoin, does mean that these lower regions become a little more likely. But of course, the dollar index moves very slowly, so all we can do is monitor it. But we do know that for Bitcoin to have those amazing mania phases, we tend to see big drops in the dollar index, and that is not something we're seeing right now. And of course, those mania phases from Bitcoin where the dollar index is going down is also what's needed for the crazy alt seasons that everybody is waiting for. Altcoins have been underperforming for a few months now, and I don't think that's going to change until we see an aggressive drop in the dollar. And of course, we're not going to see an aggressive drop in the dollar until the Fed starts cutting rates. As of right now, that's not happening until September, which also aligns nicely with the fact that we're probably going to see quite a bit of chop between now and September, because that's when we're going to start seeing rate cuts and perhaps more volatility. But for now, all we can do is monitor these Fed rate cut expectations and monitor the economic data. Unemployment rate still looks a bit concerning. We are getting an update on PCI, I believe, this Friday. So definitely be on the lookout for markets to react to that. But as of right now, all we can do is wait for that data to be released and see how the Fed reacts. I expect the PCE data on Friday to also have a pretty big impact on the S&P 500. Chopping around here, obviously it's still early in the week, so who knows how this weekly candle is going to close, but we are still kind of seeing that divergence between Bitcoin and the S&P 500, which is relatively uncommon. So if the S&P 500 is going to stay bullish, Bitcoin probably reverses and follows it. We did see a prolonged period where they diverged from each other in 2019, which funny enough today has a lot of similarities in terms of where the Fed was in their rate cut cycle compared to back then. But as of right now, still a bit of divergence. Looks like the S&P 500 might be rolling over a little bit, but again, still too early in the week to jump to any conclusions, but definitely a clear divergence between the two as of right now. As for Ethereum, still a relatively interesting chart. We had that slow bleed from March until May, that quick spike on the rumor of the ETF being approved. We slowly retraced about half that move, and we're holding the 20-week moving average as of right now. Of course, this is all going to rely heavily on those Ethereum spot ETFs going live, I believe, around the first week of July. So we'll monitor that as it approaches. Solana not looking too terrible, but obviously really struggling compared to what we're seeing from Ethereum and Bitcoin. But of course, it's trying hard to reclaim this breakdown level of about 138. A lot of times you see these very quick bounces and retests after a strong sell-off. So will it get rejected here and go lower, or can it reclaim that breakdown level and maybe break out higher? Of course, it's going to have a lot to do with what Bitcoin ends up doing. But for now, doesn't look super strong, but also doesn't look atrocious yet either. Still kind of waiting to see if we can reclaim the 140 region or if we're going to get rejected on this retest here. As for Bitcoin dominance, still chopping around in a tight range. As long as it's below 56%, nothing really to worry about in my opinion. If we're going to have an alt season, you want to see an aggressive break below 54%. But because of what we said about the dollar index and its relationship with Bitcoin and alt season, I don't think Bitcoin dominance breaking down here is very likely. If anything, I think it still wants to slowly go higher and grind up in the short to medium term, especially if we're going to end up seeing that choppy summer that we've seen in previous years. But anyway, we'll see what happens. Obviously, my main goal is surviving these choppy phases and not losing money jumping in and out of the market, being prepared for what type of scenario we may have, and of course, knowing possible outcomes for how low Bitcoin could go so I don't get scared by these narratives or get caught off guard by Bitcoin's price going lower than I thought possible. So for now, we're going to continue to monitor it going forward. But of course, in the long term, risk assets tend to go up and to the right because we price them in dollars, a currency that continues to get devaluated in the long term, which is why I'm bullish Bitcoin. It's also why I'm bullish the S&P 500 with its track record over the past 100 years. Of course, every 50 years or so, there's a 50% correction, but I'm pretty sure more people have lost money trying to anticipate those black swan mega crashes versus just having a longer term time horizon and just sticking to simpler strategies where maybe you're not going to be the best performing person in the market, but you are at the very least going to protect your downside from going too far out on the risk curve, because currency devaluation and national debt increases are not something that I see going away anytime soon. But anyway, let me know what you expect for Bitcoin and what's possible over the next few months on how low Bitcoin could go. As always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.